Welcome to Know What You Are Investing podcast, where we decode the world's top companies. Magnifying glass, what they do, rocket, how they grow, bar graph, why it matters. In this episode, we unpack Amazon's Q2 2025, a quarter that delivered record Prime Day performance, robust AWS growth, and ambitious AI infrastructure investment. We'll explore the earnings, capital expenditures, AWS capacity challenges, and what's next for Amazon heading into Q3 and Q4.
Welcome to Know What You Are Investing podcast, where we decode the world's top companies,
what they do,
how they grow,
why it matters.
Welcome, everyone, to another deep dive here at Know What You Are Investing. Today, we're really digging into Amazon's Q2 2025 earnings. It was quite a quarter, revealing a company that's not just growing, but strategically reshaping itself for an AI-powered future.
Absolutely. While still tackling some pretty significant operational hurdles.
Exactly. And our mission, as always, is to give you a quick but thorough understanding. We want you to feel well-informed without getting lost in all the jargon.
Right. Cut through the noise.
So first things first, the big numbers. What jumped out this quarter?
Well, they had a remarkably strong Q2. Beat expectations, really.
Yeah, across the board, it seemed.
Pretty much. Total revenue was a massive $167.7 billion.
Wow. And that's up, 12% year over year, even excluding foreign exchange?
That's right, 12% growth. And operating income that shot up 31% year over year.
31%.
Yeah, hitting $19.2 billion. Those are some seriously impressive jumps for a company this size.
They really are.
And look, it's not just the size, right? It's the consistency. Beating guidance like that, especially that big jump in operating income, it signals that their focus on efficiency, it's not just talk. It's actually improving their core profitability.
Structurally changing things.
Exactly. Even while they're pouring money into these new areas. Andy Jassy, the CEO, he mentions seeing good progress across our various customer experiences and businesses.
Which sounds like, confirmation that the strategy is working.
It really does, translating directly into financial success.
Okay, so let's dig a bit deeper. What really drove this performance? What were the highlights?
Well, Prime Day, for one, always a big one.
Right. Jesse mentioned record sales, number of items sold, and number of Prime signups just in the lead-up.
Yeah, it's clearly still a huge engine for them. Revenue, customer engagement, all of it.
And beyond just selling stuff, the delivery speed improvements, that seems huge.
Oh, absolutely huge. Jassy detailed how they increased the share of orders moving through direct lanes by over 40% year over year.
So for you listening, that means packages are increasingly going straight from the warehouse to your door. Fewer stops, faster.
Precisely. And they cut the average distance traveled by 12%, lowered handling touches by nearly 15%.
Those handling touches, less handling means less cost, faster delivery. Big efficiency win.
It really is. And they're not stopping. The plan is to expand same day and next day to tens of millions more customers.
Including, 4,000 smaller towns in rural areas by year end?
Yeah, a massive logistical push, but clearly they see the payoff.
And then there's advertising. Can't forget that.
Definitely not. Still growing strong. 22% growth, reaching $15.7 billion.
That's a powerful and very profitable part of the business now.
And what's really insightful, I think, is how these pieces connect. It's not just random wins. They're focused on profitable growth. Better delivery isn't just nice for customers, it saves money. More Prime signups lead to more loyalty, which fuels that high-margin ad revenue.
It's like a flywheel.
Exactly, a virtuous cycle. Which, raises the question, how does this all look when you break down the actual financials by segment?
Yeah, good question. To really get it, we need to look behind those headline numbers. Where did that $167 billion actually come from?
Okay, so diving into the specifics for Q2, it's pretty balanced, actually. North America brought in $100.1 billion.
Okay, up 11% year over year.
Right. International was $36.8 billion, also up 11% excluding currency effects.
And AWS, Amazon Web Services.
AWS continued strong, $30.9 billion. That's up 17.5% year over year.
So solid contributions from all three main pillars.
Definitely.
Okay, let's shift to profitability then. Operating income margins. Were there any notable shifts there? Anything listeners should really focus on?
Yes, definitely some key shifts. North America operating income was $7.5 billion. That's a 7.5% margin.
And that's up
nicely. 190 basis points year over year. Remember, a basis point is just 1/100%, so 190 is a solid 1.9 percentage point gain in efficiency.
Significant. What about international?
Even better improvement there, actually. $1.5 billion in operating income, hitting a 4.1% margin.
Wow, that's up.
320 basis points, or 3.2 percentage points year over year. The CFO, Brian Olsavsky, he called this a continuation of a strong progression over the last 10 quarters.
So a sustained trend internationally. That's good to see.
Yeah, but there's a really crucial detail about AWS you need to understand.
Okay.
While it's still incredibly profitable, the operating income was $10.2 billion, giving it a margin of 32.9%.
Which sounds high, but...
But it's actually down from record 39.5% in Q1.
Oh, okay. You drop.
Olsavsky explained it. Mostly seasonal stock-based compensation and higher depreciation.
Ah, so related to those big investments and how they pay people, not necessarily a weakening business.
Exactly. It's expected fluctuations, not a fundamental issue. Really important nuance for interpreting AWS performance.
That context is key, definitely. Okay, moving on. How are they fueling all this future growth? Let's talk CapEx, capital expenditures, and free cash flow. Where's the money going?
Right. So CapEx in Q2 hit $31.4 billion.
$31 billion in one quarter.
Yeah. And why this matters for you is it shows they're heavily reinvesting for the long term, not just sitting on profits.
Where's it primarily going?
Mostly AWS, funding AI services, building data centers to meet that huge demand we'll talk more about, plus improvements to the fulfillment network for those delivery speeds.
And they expect this level of spending to continue.
Pretty much. Management said this Q2 figure is reasonably representative for the second half of the year, so yeah, heavy investment continues.
Okay, and what about free cash flow? How much actual cash are they generating after all that spending?
Well, the trailing 12-month figure was $18.2 billion.
$18 billion, which sounds like a lot, but...
But context is everything here. Operating cash flow was up 12% year over year, which is good. However, that $18.2 billion in free cash flow over the last year, it's actually down a massive 66% from the same period last year.
66% decrease.
Yeah, back then it was almost $53 billion. This just highlights how heavily they are investing right now, pouring cash back into AI and infrastructure.
Reinvesting almost everything.
Pretty much. And just to circle back quickly, that advertising revenue, $15.7 billion, up 22%, really helps prop up the overall profitability.
Mm-hmm.
And another interesting point, third-party sellers. They hit an all-time high of 62% of all units sold worldwide.
So almost 2/3 of items sold on Amazon aren't actually Amazon's own inventory.
Exactly. And that matters because those third-party sales are generally higher margin for Amazon. It reinforces the power of their marketplace model.
Right. They don't have to hold all that inventory themselves.
Right.
Okay, so you mentioned the huge CapEx numbers, and a lot of that is going to AI through AWS. Let's really dig into that now. This feels like the core story.
It really is. So AWS revenue, $30.9 billion in Q2, just phenomenal scale. That puts it on a $123 billion annualized run rate.
Incredible. But you mentioned challenges.
Yeah, the big one Jassy highlighted. We have more demand than we have supplied for at the moment.
They literally can't keep up with demand for AI services.
Essentially, yes. He said the single biggest constraint is power, then chips, then other components.
Power for the data centers.
Exactly. And he cautioned it'll likely take several quarters to fully resolve this capacity crunch. So the demand is overwhelming.
That's quite a problem to have, I suppose.
It is. And you see that demand reflected in the AWS backlog. It hit $195 billion at the end of June.
Almost $200 billion in future contracted business.
Yep, up 25% year over year, shows massive customer confidence.
Wow. Okay, so given this demand and the constraints, what specific AI investments are they rolling out to try and meet it?
They're pushing hard on innovation. Jassy talked about Trainium2, their custom AI chip. It's landing in larger quantities now.
Their own silicon.
Right. He said it's the backbone for Anthropic's newest generation Claude models and key AWS services like Bedrock. And he claims it offers about 30% and 40% better price performance than other GPUs.
Building their own hardware edge. What else?
They've got Amazon Nova, their own big, powerful AI model. It's already the second most popular foundation model in Bedrock, which is their platform for building AI apps.
Okay.
And for businesses trying to deploy AI securely, there's AgentCore. It's a set of building blocks like prefab components, providing the industry's first secure serverless runtime for AI agents. Makes it easier and safer for companies.
And for developers.
Kuro. It's a new coding agent, basically an AI assistant for writing software. They call the experience vibe coding Developers just chat with it in natural language to build code.
Vibe coding. Huh. Is it catching on?
Apparently, yes. Several 100,000 developers using and requesting access in the first couple of weeks. Huge initial interest.
That's a lot going on. Trainium, Nova, AgentCore, Kiro. It sounds like they're attacking AI from multiple angles. How does it all fit together?
Well, Jassy keeps framing it within this massive long-term vision. He called AI the biggest technology transformation for a lifetime.
Right.
And he points out that, 85% to 90% of global IT spending is still on premises, not in the cloud?
Still a huge runway for cloud growth.
Exactly. And he expects that equation to flip in the next 10, 15 years, with AI accelerating that shift. New deals with big names like PepsiCo, Airbnb, NASDAQ, they show the current demand is strong.
So all these innovations feed that bigger cloud and AI transition. Makes sense. Okay, beyond the core retail and AWS behemoth, what other bets are showing promise? Where else are they placing chips?
Well, Alexa Plus is one to watch. It's rolled out to millions, getting very positive feedback.
How is it different?
Jassy says it's so much better because it's more intelligent and can actually do things for you, unlike some other chatbots. He sees potential for more engagement, services revenue, ads, maybe even a subscription beyond Prime.
Interesting. A potential new revenue stream there.
Definitely. Then there's Project Kuiper, their satellite internet project.
How's that going?
Progressing. Had its third successful launch. Jassy's talking up performance differentiation, compelling pricing, strong enterprise interest.
When might we see it launch commercially?
Targeted for later this year or early next year, though he mentioned some delays with some of the rocket providers, but is moving forward. Another layer of infrastructure they want to own.
What else? Amazon Pharmacy.
Still growing fast. 50% year-over-year growth year-to-date on an already significant size base, making steady inroads into healthcare.
And Prime Video, live sports.
Seems to be working. Their first NASCAR season drew about 2 million viewers per race, and crucially, the youngest audience among NASCAR broadcasters in more than a decade.
Attracting younger viewers, and they have NBA coming up too.
Right, announcing the broadcast crew. It's all about adding value to Prime and reaching new audiences.
And circling back to advertising.
Momentum continues. Strong growth, plus new integrations with Disney's Ad Exchange and their own DSP expanding reach. They now have access to the largest authenticated connected TV footprint in the U.S.
Meaning they can place ads on lots of smart TVs and streaming services, not just their own sites.
Exactly, broadening that advertising footprint significantly.
Okay, but even Amazon doesn't operate in a vacuum.
Yeah.
What about the wider economy? Tariffs, competition, how are they handling that?
Jassy tackled the tariff uncertainty head on, admitted it's hard to predict tariff impacts.
Yeah, a lot of noise around that.
Right. He said, we just don't know what's going to happen moving forward regarding who eats potential cost increases. But importantly, he also said that through the first half of the year, they haven't yet seen diminishing demand nor price is meaningfully appreciating. So uncertainty, yes, but no real impact felt yet.
Okay, that's somewhat reassuring. What about competition, especially for AWS? Some analysts point to competitors growing faster percentages. Is AWS losing its edge?
Jassy gave a pretty nuanced answer there. He acknowledged others might have faster percentage growth rates, but stressed AWS is a meaningfully larger business. Growing 17.5% on a $30 billion base is very different from, say, 30% on a much smaller base. Scale matters.
Good point.
He also highlighted AWS's advantages in security and deeper functionality. And crucially, he kept coming back to the fact that AWS has more demand than we have capacity right now.
Right, the supply constraint is actually limiting their reported growth.
Exactly. It's not a demand problem, which is a much better position to be in.
Makes sense. And given this huge external push on AI, how are they using it internally to make Amazon itself run better?
Jassy sees AI changing very substantially the way we work. Across everything, coding, analytics, research, finance, automation, customer service.
Just applying it everywhere.
Pretty much. Embracing it internally to boost efficiency, help teams invent for customers much more quickly and much more expansively. He even suggested it makes jobs much more enjoyable by automating the rote parts.
Freeing people up for more creative work. That internal AI application could be a massive hidden advantage long term.
Absolutely. A huge, unquantifiable lever for efficiency and innovation.
Okay, so wrapping up this incredible Q2 picture, What does it mean for the near future? What's the outlook for Q3 and beyond?
For Q3, the guidance is pretty positive. Net sales expected between $174 billion and $179.5 billion.
Which suggests acceleration from Q2, right, heading into the holidays.
Exactly. Operating income guided between $15.5 billion and $20.5 billion. And they expect a bit of a tailwind from foreign exchange rates, about 1.3 percentage points boost to sales.
And the heavy CapEx spending continues.
Yes, Q2's $31.4 billion level is expected to be reasonably representative for the rest of the year. Continued investment.
Got it. Now, during the earnings call itself, how was the tone? Especially when analysts started asking the tough questions.
It was interesting. Management sounded very confident in prepared remarks, highlighting all the records and strong demand.
Yeah.
But the tone became more measured and cautious in Q&A, especially on tariffs. We just don't know. And on AWS supply constraints, Jesse admitted resolution might take more than just a couple of quarters.
So acknowledging the uncertainties more directly in the Q&A, how did analysts react?
Sentiment seemed slightly skeptical, particularly about tariffs and how long the AWS capacity issue might impact growth compared to competitors. But the main focus remained on AWS momentum, overall margin strength, and those international improvements.
And no specific Q4 guidance yet.
No, just generally cautiously optimistic amid the uncertainty.
Okay, a lot to process there. Record results, massive AI investments, supply constraints, cautious optimism. As we finish this deep dive, let's leave our listeners with a final thought.
Sure. Here's something to think about. Given Amazon's huge investments in AI, not just for customers, but also internally, using custom chips, how might this biggest technology transformation for a lifetime, as Jesse calls it, fundamentally reshape their own operations? Think about their cost structure, their speed of innovation. Could the impact be far greater in the coming years than what we can even see in these quarterly numbers right now? It's definitely a long game they're playing.
Thanks for listening to Know What You Are Investing podcast, where we decode the world's top companies.
What they do.
How they grow.
Oh, why it matters.
Thanks for listening to Know What You Are Investing podcast, where we decode the world's top companies. What they do, how they grow, why it matters. Today's recap of Amazon's Q2 2025 showed us how bold bets on AI and logistics are shaping the company's future. Stay tuned for more deep dives into the world's most impactful companies.